Hey guys, it's Crossroads here. Today I wanted to talk about SoFi earnings, specifically the quarter four preview. It's a report actually this time next week, Monday morning, opening up on January 27th. And of course, the most important thing is going to be guidance. Now, as far as what I expect, it's going to be another triple beat, which should not surprise those of us that have been following the company. And I think it'll be a little bit better than analysts expect. Also, not a surprise for those of us that follow this company. Let's look and take a look at this. So here's what analysts are thinking when they are coming to the earnings estimates. They're expecting around a three, rounds up to actually 4 cents EPS. The high estimate is 4 cents EPS, and they're looking at average revenue of 678 million. 688 is the high estimate. I actually think it'll be a little bit higher than that. I did want to show you this. I don't think it's going to be as good as it was last quarter. We can see just how massive this revenue leap really was as they opened up the lending box massively. Financial services grew very well. Tech did okay-ish. But the issue here, it really is they have a harder comp. You can see quarter four revenue here. It really spiked last year before it retracted in quarter one. So quarter one, a quarter from now, I think they're going to actually have fantastic just because they're comparing themselves to a much weaker quarter. But quarter four last year, they did very, very well. Now, as far as individual segments, what I'm thinking is that they're going to first hit around 800,000 members in growth. Now, the reason why I'm expecting that is football season has been fully underway, and SoFi Stadium is getting a lot of use from that. I've seen a lot of marketing ventures, and of course, one of those with the golf and the TGL. That's one of those things that might not pay dividends really until January. But they still maintain fairly high rates. They have a great body of services. They have a lot more name recognition because of their partnership agreements. And so I think that they continue to accelerate, putting in a record 800,000. Now, this is not net members. They do have some people that are leaving the platform, people that break terms of a subscription, that are fraudulent, that or just have been inactive for a really, really, really long time and have no money on the platform. I don't expect as many to turn off as did in the prior quarter, but so I think the net will be somewhere around 775,000 new members, which is fantastic. Now, one of the reasons why I have a lot of confidence to project something like that is they actually had mentioned back in December that they were celebrating 10 million members. And so plotting the trajectory, they would actually come in a little bit higher than 800,000. But usually around Christmas, things slow down, especially for banks, because, hey, they're closed. And SoFi, they do operate under those hours. So I would not expect, that trajectory to continue climbing all through, but 800,000 is a fantastic number. Now, for lending, I expect them to put up about 345 million year over year. This is actually a slight decrease, but it's basically the same as what they put up in quarter four. We saw that quarter four numbers. They were very, very good. So this should not be perceived as a disappointment at all. I do think they're being a little bit more cautious than they were in the prior quarter with their own lending. The reason why is there were some concerns among other lenders, specifically Ally, who primarily what they do is they offer loans to those with lower credit that are buying used vehicles. So not really something that compares well to SoFi, but at least that got major headline attention. SoFi tends to take these risks seriously, and so I expect that they were a little bit more conservative in this quarter than they had been in the prior quarter. And also there was some uncertainty as far as election, and there's some uncertainty as far as rate cuts too. Those questions have largely been answered, and so I think that they'll continue to be lending fairly aggressively. Now, the nice thing is for SoFi, those things that they're not loaning directly or originating directly for themselves and have on their own books, they instead have a lending platform, a loan platform rather. And of course, we saw a deal announced, a $525 million loan securitization agreement that was announced in January. So it doesn't pertain to last year. But of course, we saw Fortress as well doing even larger one, a $1 billion securitization agreement. All that's to say, between what SoFi has done, these announcements, and also what banks are reporting as far as interest in their lending products, I think that there is fantastic interest in what SoFi is doing as a business. So as a result, I'm expecting a $264 million print from financial services, putting them at 90%. That's right, 90% year over year growth on that platform. Keep in mind that loans that they originate, but they don't keep on their books for themselves, they instead refer them through their lending platform to one of their partners, that counts as financial services. So with SoFi being a little bit more cautious on their own portfolio, those people that were interested in SoFi loans instead, they can at least get some money from them from that loan portfolio. So not a bad place to be. Now, technology platform. I have a video from a couple of days ago where I talked about this. I think there's going to be a lot of acceleration in the technology platform. There's a lot of headwinds that are shifting to tailwinds. Watch those videos and see why I say that. I do think quarter 4 is going to be a little bit early for some of that. Now, we will see some acceleration, but just based on the year-over-year comps, it's only a 13% growth year-over-year, unless they land a major client or things have accelerated faster than I expect. Part of the bump is that Galileo, of course, issues debit cards, and every time that somebody swipes one of those debit cards, they get a little piece of that action. And of course, there's the holiday spending that happens around this time of year, or at least in quarter 4, which was absolutely robust. And so some of that spending certainly was through debit cards. As a result, I think that they put up a solid but not amazing quarter on the tech platform. Now, fintech winter itself is really shifting to fintech spring, and I expect that this will be the lowest year-over-year revenue growth that we see on the platform, that we won't see numbers like this all through next year. Things are really going to accelerate and heat up quite a bit. So the net revenue actually comes to about $689 million. It's a 16% year-over-year growth. And let's go ahead and look back and see what the analysts had said just to compare that. That's actually slightly in line with what the analysts have said as far as a high estimate. I'm slightly higher than that. And I wouldn't be surprised if SoFi actually does better about that. One of the reasons why, if you're adding my numbers, you're like, well, he's missing some amount. What's going on with that? And specifically, they have some contra revenue. This comes from corporate revenue. And I want to show you what that looks like as well. So let me blow this up here. So corporate revenue has been really hard to predict. You can see back in 2022 was negative by 5.3 million, negative 4 million, negative 9 million, almost 10 million, negative 20 million in quarter 2, quarter 4 rather. Quarter 4 does seem to have a little bit more volume, but you'd think, oh, it's always going to be negative, this interest income. But if you look here in 2023, we actually see in quarter 4 they posted positive $17 million, positive 16 million in quarter 1, and then back to negative in quarter 2, and negative $40 million in quarter 3. None of us saw that coming. It is tough to predict. I am projecting, I believe it's $30 million of contra revenue from this, but I really don't have any idea. If it's positive, all of a sudden they have a lot more money than we expect. Growth is a lot better. If it's worse than that, I don't think it would be much worse. I just prefer to be a little bit more cautious in my projections. That said, as SoFi grows as a platform, I think that those numbers that they actually have for that will continue to increase as well as their assets continue to increase. So we'll see what happens with that. So where does that put them as far as EPS and projections? So I see that breaking down to about $56 million in net income, and that gives them about a 5-cent EPS print. So that is a triple beat by every definition. Of course, the triple part comes from guidance. Guidance is really going to come into center focus. Anthony Noto saw fit to share with us what they thought that the platform looked like through 2026. Assuming no other products and nothing else was launched. Well, of course, the lending platform has been launched, and the loan platform, rather, is really seems like it's going to garner a lot of interest this year. So I'm curious how aggressively they guide. They tend to guide very conservatively, but here they may be a little bit more aggressive than most people are expecting, leading to that triple beat. We know what numbers are trying to hit in 2026, and to do that, we need to see acceleration in their business, certainly on their lending side and their tech platform side. And I think financial services will just continue to do fabulously well through that lending platform. So not too much of an issue there. It really will come down to guidance. Now, as far as stock predictions, That's tough. I don't know if the stock will go up on the news, if it will go down. It just kind of depends on what mood the market is in. But I'm not too concerned. I have long-term horizons with SoFi. I plan to hold the shares for a good long time. I do have a number of leaps that it'd be nice to see those continue to increase in value over the next couple of years. But as long as they're putting up solid numbers, and this wouldn't be the most amazing quarter ever, but it's solid, it's good. I'll continue to be a shareholder as long as they execute. I am most interested in what that guidance shows, and I would love to also see if there's an indication that student lending is ticking up. That's part of the loan services as well. It's something that I think will not tend to be like quarter three is really where seasonality comes into play for student loans, just because there's some that go for private student loans directly, or graduated and all of a sudden this is the first time they need to pay back. Quarter four tends to be a little bit lighter, but perhaps, and I've seen indications just through qualitative analysis, that there's a little bit more interest right now in student loans and student loan repayment, especially with the new administration coming under play, probably repealing a number of Biden's measures as they relate to student lending. So time will tell. I think that will accelerate greatly through the year. Maybe not yet in quarter four, but that's what I'm paying attention to. Let me know what you think in the comments. Are you expecting even better numbers for SoFi? Did I get it wrong on one of the platforms? Give me your thoughts. I'd love to hear it. And also, as a fun bonus, what do you think the stock will do? Because I only am guessing at this as far as how the stock will react. SoFi is very volatile, but it's a great name to own, and I plan to continue owning it for a long time. Thank you for watching, commenting, and subscribing. As always, happy investing.